We were delighted this morning to host our fourth annual event with Davy, which focused on the area of non-financial reporting and ESG. As ESG continues to drive the agenda for investors and companies alike, it was great to hear from global leaders in the space on how to tackle the big issues on ESG.
It was great being here in Dublin today with FTI to talk a little bit about sustainability, both from my personal experience as a CFO, and also talk about the importance of having standardized metrics and a more clear target for the most significant elements that companies can build so that investors better understand the issues in their industry. I was a long-standing chief financial officer at UPS and had a lot of interest in sustainability, but was concerned that investors didn't really care. In my years, both as an investor relations officer and a CFO, we produced sustainability information, but there wasn't much pull from the investment community. Now that I've retired from UPS, I've joined a group called the Sustainability Accounting Standards Board, which really is an attempt to build a bridge from corporate sustainability information and the investment community.
Some of the key takeaways for issuers from this morning's session. Firstly, it's really important to start with clean, validated data. I think the companies who score well on the ESG rating agencies are companies who've really focused on reporting clean data that's backed up and verified. Secondly, I think it's important to focus on materiality. So looking across your industry at what metrics are really important and aligning your reporting around that can prove to be really successful. And thirdly, analyse your top 10 institutional shareholders, understand what data they're looking for and what indices data providers they subscribe to as a good starting point in your efforts.
So I think the world is changing quite rapidly and the investment world is as well. And the use cases for ESG information has expanded quite dramatically, and some of the other speakers mentioned about fixed income portfolio managers, but we're seeing wealth managers and risk teams and many others using ESG data. And I think for corporates, the challenge is what information to put out there to meet the needs of those professionals. And it's really understanding what's material to the company's own business. So what are the material ESG risks, potentially even using the likes of our reports to help identify some of those, but also thinking about their strategy and making sure that they've thought through the risks that they faced 5, 10, 20, 30 years down the line and providing the appropriate disclosures for that. We look for information to be in the public domain, to include in the ratings, and that can be a challenge. How do we disclose, or what format do I need to put this in? There's a lot of support out there, and we saw from SASB as well today, they have a framework that maybe corporates can utilize. But in a changing world, what's relevant now might not be what's relevant in 5 years' time. And it's continuing to adapt and respond to the changing world in making sure your disclosures are fit for purpose.
I think over the past 18 months, what's really stood out is the increasing amount of capital flowing towards ESG related funds and ESG investment strategies, and in certain circumstances that's caught companies off guard. And what the challenges we're trying to address with companies is, are you putting your best foot forward? Are you increasingly interlinking the ESG story to the financial narrative? And is it a holistic view of the valuation of the business? That comes down to, are you enhancing your reporting? Are you providing sufficient information to the investment community so they can make a decision? Are you telling that story not just through your annual report around governance and remuneration, but increasingly through investor roadshows, results presentations and capital markets days?